And we are live. Today we are starting with a new format. We call it Guru Talks. It will be a talk show, and we have our host, our business development head in Guru Network. Uh, Meet Yaro.
Hey guys, good being here. Excited to kickstart this show. I think I want to kind of walk through the whole format of what are we doing, what is this whole new show, what it's going to be about, who's it for, and I think the good starting point is to kind of explain the concept. So Guru Talks is the light format, casual format, conversation style um, stream where we invite different guests from different projects who are in the Web3 space. We really want to highlight their projects. We want to dive deeper into what is going on in Web3 space. We really want to highlight what is exciting, how this works. I think viewers who are interested in getting to know what Web3 is all about, or who already are in Web3 and want more casual, not like alpha style and super secret inside info, but more of a casual conversations about modern things that are happening, this would be perfect for you. I'm really looking forward to inviting lots of guests. So if anybody listening knows anyone who should be on this show, please let me know. Happy to chat. And maybe we can make an episode here. Typically, we will do 30 minutes to an hour or more, depends on how the conversation goes on this in this format. I hope you can enjoy, grab a little drink, snack, get comfortable, participate in conversation. We do read chat. So if you have anything to say, if you have anything you want to ask us or any conversation you want us to touch because we have specific expert in this matter, by all means, this is your perfect opportunity to do so.
And we have our first guest. It's Vice President of U-Topia, Tyler Leonard. Welcome, Tyler.
Hey guys, sorry, I think I'm still on mute. Can you hear me?
Yes. Hi, Tyler.
Yeah,
Great
crystal
to
clear.
see you guys again. This is the first time I'm going on camera, so
I
do
know.
mind me.
This is already gonna go million views just because Tyler is live.
Only docs, right?
Yeah, I've been talking to you for I don't know what months now, right?
Yeah.
And never seen you live. So welcome, nice to meet you face to
Actually, I
face.
do exist. It's not just an AI.
Sometimes I was thinking that.
Actually, like my work schedule, I've been recommended multiple times that I should take a break. I actually got a warning for working too long, so maybe I do have a bit of an AI element to myself.
Well, I'm excited to have you on. Thanks for being our first guest. This is going to be great. I don't know if you heard the intro that I was doing about the
Yeah.
format, about how we're trying to do this. It's supposed to be very casual, relaxing, kind of simple conversations that we can have and talk about things. Specifically, why I wanted to invite you to the show first, because you're coming from finance background. And I think that is super, super, super cool. I kind of want maybe get started with you telling a little about your background, where you're coming from, and how did you end up in Web3. And then I want to just dive the whole section into finance in Web3 from your point of view, and what do you see in it? Because I see right now a lot of bankers moving into Web3, and this is exciting.
Absolutely. Yeah, absolutely. So I guess my journey in Web3 started roughly technically in 2017. At that time, I was working as you can say, private banker. So I used to deal with, you call them high net worth individuals. So it's a exclusive bank. Users need to have a certain amount of assets in their accounts. I used to deal mostly with the corporate side. So this is institutional banking. Um, Honestly, it's a huge difference between like traditional finance to the way finance is handled in Web3. Um, on a good note, and there's a bad side to it, obviously. But yeah, it was, I could say my first step into crypto started obviously with BTC. I bought at that time somehow the top of like $4,000 of BTC. I thought it was a bad investment. I sold it off, which is quite sad if I just had to hold. Yeah, so that's like basically 2017, bought a bit of BTC, hit some highs, didn't really care about it, continued working in banking. And yeah, roughly 2019, I started moving away from traditional banking. I was actually exploring, let's say, development. So I was, teaching myself how to code. I started creating my own systems. So trading systems I created basically set the forefront of who I am today. So I created, if you see on like TradingView, I have roughly 6 different scripts I created at that time. And then I have some stuff I created on MetaTrader. At this time, this is still without crypto. This is working directly with indices, Nasdaq, for instance, as an indice, or foreign exchange, so FX, right? So as you develop scripts for them, this is algorithmic trading or tools technically. So I still do that. So I create still tools for people. It's just an easier way to view it. And right now I'm busy with like some type of, you can say, quantitative analysis. So I create quantitative tools and bots and so forth. And then basically 2020, I went on this whole Anon movement. And it so happens I love finance and I love Anon, and I somehow ended up in crypto for free. And it was probably, I think, 2019, actually 2018 I bought ETH as well, but 2019 I had some ETH, and I just kept getting, ETH as my go-to token. So I would, take profits, rotate it back into ETH, but not really trading per se. I just thought it was, like a great ideology. So crypto wasn't for me like a great way to make money, but the concept and the ideology of it actually drew me to it, especially like the anonymity to it, and the financial component. So I like the way people can interact on chain, and provide, their own inputs. It really, interested me. And obviously during that time, I ended up like doing a coding course on NFTs. I somehow bought an NFT from Badger Finance called Worthless Banana. Now, I must say that I actually thought I was going to get a banana sent to me. So I minted this thing for like $600. I thought it was the most craziest thing I've ever done in my life. Like, I'm buying a banana online for $600.
Right.
I better see it. So like I go back, I'm looking, because I'm used to invoices and orders, and all it shows is this hash key. I'm like, I go in the community on Discord. I'm like, hi guys, I ordered my banana. When does it ship?
Right. I mean,
But
NFT was sort of phenomena, right? Like,
yeah.
boomed real quick, and then nobody really knew what it was. There was a huge FOMO around it, and that's something we can definitely talk a little later around this thing.
Absolutely.
I'm very curious about your perspective, like traditional banking versus Web3 banking. There is a huge shift, right? And I think banking traditional already was invented, and it was developing and growing the right way. And we do have, you can go buy stocks, you still can do things, grow your portfolios, invest, get in, get out quickly. But what's the difference? Like, what is it that excites you about the Web3 approach?
Yeah, absolutely. So if you can say the traditional banking sense technically works by ledger, right? However you want to view it, it's not necessarily a public ledger, but transaction itself happens with tokens and ledgers. So they have internal banking systems that basically recognize by token of transfers between intermediary parties.
Mm-hmm.
Now, to me, this is a very archaic system. Technically, all funds are managed, if you could say, by a spreadsheet, right? So it's just a generalized database and how transactions are done. This also created a huge bottleneck. So for instance, feedback mechanisms for scalability is a huge hindrance. Like for instance, in traditional banking, there hasn't been anything innovative in the sense from traditional banking if you compare that to Web3. Not just like interoperability between different chains and so forth, allowing us to globally transact without having, for instance, 3-day turnaround just to verify a token. That's basically what happens on banking. And all that is happening is communication between two individual parties without an intermediary verifying if the data is true. And this obviously creates a huge bottleneck in terms of, for instance, scaling up to innovation. So innovation is always stopped in banking. If a new bank has to emerge into the current market, they are basically going to utilize the same components as their nearest competitor. And all they're going to do is like selling bananas. They know, for instance, the initial users will obviously benefit higher than the users that come afterwards. So for instance, if I go into the banks first, I will have a higher, say, interest rate. And this is obviously paid in forward by the user that comes after me. And technically, like crypto, for instance, that's seems similar to if you are buying in early versus you buying in late. But if you remove just the ideological perspective of price goes up, and then you look at the transactional model that crypto has, is where we are actually sharing in revenue. Now, in your traditional banking, this is not happening. Revenue is never shared between any party other than the holding party themselves. So, for instance, you have a reassurer that basically takes on the risk of the bank, where it's the capital that's been sent in, but the user's funds are used to pay the reassurer, and then the user, technically, the interest that they are earning is by money circulation, right? Because their money is out of their control. It's quite a fundamental perspective I used to have in banking, and I had to tell my clients. So prior to going to banking, I was a financial advisor, and I used to explain this to my clients. So you see a high net individual would never hold a certain amount of capital in their bank accounts because that money is sitting and doing nothing. And this is basically what generates interest or churning funds, is that you always want your capital outside of your control and in you can say pseudo control of third parties for you to generate capital. Now, banking systems technically exploit that by taking your own capital and reborrowing it to other individuals. But technically speaking, if you look at the revenue that's generated from them, the users are getting basically 20% only of that generated income. Now, within Web3, the difference is that this is completely transparent. So, for instance, even though let's say a project might have a fee on the, say a staking pool, for instance, or there's yield farming. Those transactions are completely visible, and you can see how much the project has been earning from those. The difference is that the users are most likely in crypto to actually earn higher revenue share than in any other industry. And that, for me, makes it the most interesting.
So can we say that in banking system, bank always wins? It's kind of protect itself. It has those systems that reassures that they win first, and then the money's being distributed to the other parties. Whether in Web3, it's everyone is sharing the rewards.
Absolutely. If you had to look at just a traditional bank, what you usually would see is similar to a website. You've seen the front end development and what they want you to interact with, right? But if you had to basically, go behind the curtains and see what a bank is, technically speaking, banks are, yes, they are financial services, but their biggest businesses are technically from their, let's say, their holding companies, which are insurance brokers and so forth. So you have the creditors, insurance brokers, and then you have the reassurers that are coming in to basically form what you know as a bank. This is why banks obviously offer loans, and then they have short-term insurance, or basically insurance applied onto your policies or your banking accounts. This is technically where they are generating the most capital from. Once again, they're eating at your initial capital that you've given in, and then you obviously have additional fees from transactions that you're paid. You're paying onto the account, and at the same time, you also have all these insurances built on top of it. And then once again, the background of the bank, it goes around to these reassurance houses. So one of the biggest conglomerates is out of Germany, and they basically are the ones that are, you could say, reassuring majority of banks, especially in the Southern Hemisphere from where I am. These are basically a layered approach, so they technically never have risk, because their upside is always taken into account from the total sum from the reassured side on the insurance policies. So there's always capital flowing. And the funny thing I would always say to my friends, especially when I was a financial advisor, is like, when I moved to trading and being a financial advisor back in the past. So I'll tell them, it's kind of funny if you notice that everybody, for instance, has an annuity, for instance, some retirement or pension fund, and they have a debit order set on their account, say, the 30th of every month. But if you go onto a chart, there is no big sum of volume coming exactly at that time. The reason being, that's traditional finance. Everything's on a ledger and controlled internally. So even though they might be collecting those funds, it's when they choose to deploy it and how they actually use it before even putting that on the books.
Yeah, it's quite fascinating how bank originally started, because people would break into somebody's houses and steal coins.
Yeah.
And then you're like, well, if I'm traveling or if I just want to save my money, I'm going to put it into this building with a bunch of guards, and I'm going to pay them to keep my money safe. And they're going to give me a little receipt that I can come back and just withdraw my money that, I put originally in. And then later, these smart business owners were like, well, I have all this cash sitting. Let me monetize it and let me give it to other people, and created this whole financial system, which is really fascinating. And I think this is the goal of this real show, Guru Talks, is to kind of simplify complex ideas and terms into simple to understand and process ideas, something we can share with everyone else. Because a typical question is like, why Web3 finance versus banking finance? And currently, what I picked up, if I were to translate that into this simplest term, I would connect it to gambling, not to connect the Web3 to gambling, in the like casino term, because I do love that. I would say traditional banking is more like blackjack. You have a chance to win, but the house always wins. The rules are designed for the house to win.
Yeah.
Web3 it's more like poker. You play with other players, right? The casino is out of it. They're like, well,
PvP, absolutely.
and I think that's it doesn't mean this is how it works. It's just sort of a idea of understanding different games, right? Different concepts. And to me, that makes sense. It's something I can communicate to my grandma and to my friends to explain, hey, this is a difference. Do you want to deal with a game that is rigged already against you, or do you want to be playing with other players, right? So that is sort of where I think the key difference is. Am I correct here?
Yeah, I actually like that analogy forward. Funny enough, you brought up the history of banking. So I'm not sure if you recall, like basically how the gold standard was formatted, and how obviously linked back with the Bank of England. So it was Isaac Newton actually that wrote the general principle of the gold standard that we so-called use today, but obviously moved away from that from like 1970. But fundamentally, his idea or his ideology is something you could say is an ethos to what crypto is. It was to create like a safe haven and a ledger for people to transact. I think when we shifted away from the gold standard, and we could say it like right now, it's the dollar standard, right? What is the dollar backed by? It's backed by amazing fucking military. So that is exactly what you could say. The dollar standard is because.
Do you think we need
Yeah.
gold standard? Do you think a currency
Absolutely.
is tied to anything specifically?
No, I see. Here's the thing: like inflationary, deflationary assets, as we can see it in crypto, we have a good tested model, right? On backing of assets. It turns out that you don't actually need a standard to be backed by, but instead you need an ideological perspective. So, for instance, Bitcoin is backed by only thing is backed by is an ideology, right? So all of us collectively believe in it, and I do like the fact that technically the dollar moved away from that, right? And the dollar is backed once again by their military because of the belief in the security that their military brings. But once again, that did open avenues for, let's say, banking systems to exploit. And this is once again goes back to what is Web3 versus banking, and that goes to the transparency of ledgers, right? And traditional banks, for instance, will never move away from the way they do it. It's just that they will incorporate crypto into their existing framework, but still to their benefit. So, like, for instance, ETFs, there is no actual spot price that is taken into account because this is not actual purchases. These are just written contracts that you own this sum of BTC. So once again, it's good for Bitcoin to get exposure, but technically not, I would say, the Satoshi goal. It's for us to just have ETFs versus people having direct exposure to crypto.
Yeah, I have a different point of view on this. I agree with you that it shouldn't be backed by anything. To me, currency is something else. To me, the strength of a currency is the ability of spend it within that country or region. So let me explain more. For example, if I'm being paid in dollars and I live somewhere in the world, right? What does that mean? Like, even if imagine if each country was to be like, hey, we're gonna close off all our borders and you can only accept our currency and spend it within our borders, right? So what does that mean? If I live somewhere else and somebody offers me a dollar, it means that if I were to come to the United States, which is likely, and I can buy all these services and goods for something I did for somebody, and I got paid in a currency, right? But if I'm getting a currency of a country that I don't never plan on visiting and never plan on buying something, that means it doesn't mean anything to me, right? It doesn't have any value to me. So I feel like the value of a currency is the ability of spend it and get specific set of goods and services, like I would still would love to buy iPhones. I still would love to go and see NFL games or NBA games in the United States. So it has some value because of utility of this token. And I mean, not token, but currency. But you see
Yeah, yeah.
and therefore, I think it's all about utility. I think this is where the currency gains the biggest value. We can dive later into the Bitcoin and all the other things because their utility is obvious, like sending money across the world with ease and certainty. That is absolutely insane, and not needing to go through all these hoops to actually get money across, which should be super easy. I think that was the whole point of original banks, is like you can share your receipt and then the other person can come and pick up the money from the receipt, right? So that's kind of the idea, and we're getting there with the whole cryptocurrency. But I want to talk about utility because I know this is where U-Topia's whole philosophy, this is where you guys are coming from. This is why you created this whole token, because you want to create utility for a token, which in Web3, I think it's lacking. A lot of projects out there really lacking that utilitarian functionality. Tell us about the philosophy of utility overall.
Well, that's quite a difficult question on utility, but I do like the 2 pointers that you brought up just before I go into utility. So one thing, for instance, in just traditional finance, or you can say currencies as well, especially seen here in Africa, is the trust network between interacting with a set of currency. For instance, in South Africa, we only use ZAR. And then if you go over the border, for instance, Zimbabwe, Namibia, Mozambique, these countries would use ZAR, US dollar, and then their native currencies. The further north you move from the south of Africa, the more likely you will find dollar exchange. The reason being is the trusted network, not in terms of the individuals that are in that country, but the global trust of their currency, right? So how many investors they are getting. Obviously, with the less investors they're getting or trust within that network, the higher fluctuation or instability within their currency you would see. Now, if you take this back into crypto, this is a similar methodology that we could utilize. It's once again a trusted network, but the difference is this is an anonymity, independent, verifiable trust system, right? So we don't necessarily need to know who is the trusted system, but that there are a trusted system of individuals that are interacting with the token. Right? And then if you take it one step forward and you say, what is the utility purpose? Obviously, if you say currency, I like the way you said it, it's the ability to create or, function as a transaction, as a ledger to say that I have X amount and this has a value, right? So which is your Y in this case, and you can, make the transaction. But I think crypto has taken this much further, and this is why I prefer utilizing even the term of digital assets. Is that if we continue saying it's just a currency, it limits ourselves only into transactions, like a transactional-based model. And this is where actual utility comes from, is broadening the scopes of what we technically are and what the purpose of tokens serve. Meme coins, for instance, there is a lot of different opinions of the purpose of meme coins and so forth. In my opinion, they are absolutely great. They technically do serve a purpose, right? And they do have a utility. The utility is a mind share, like how much information or how many eyes are viewing in it. And that is a utility in its sense. It might not be a transactional utility that users are getting, in terms of an application. I can't use my house coin to go buy a house, as much as the meme would say, or I can't use that as collateral assets. And this is, I think, a step that we are moving towards in crypto, is understanding the nature of this all being types of digital assets and how they actually can function, right? So away from them just, at first people are maybe they're securities, they want to put it into a financial box that we already, pre-established, especially in the traditional banking sense. So it's like, is this a security? Is this a currency? But I think because this is a new market, it's harder to distinguish within the existing framework that we are used to, because it serves many purposes. So for instance, utility in the sense of transactions, and then the utility sense of digital safekeeping, right? And this is where U-Topia, you could say, we've had a look at it in different models. right? So first is the transactional model. For instance, when you as a user are transacting, not necessarily only in our currency. So for instance, you can look at Stripe, Visa, MoonPay, and so forth. You are paying transaction fees for that. Now take it to crypto, we're paying gas fees, right? And it becomes very difficult to keep track of all the different tokens you need in your wallet to pay for gas. Instead of us just viewing it at at a broad level, like okay, we'll just create another layer 2 where users can transact, and then we bulk all these orders into one batch orders. It's quite typical, and there's a lot of good ecosystems that have been built on this. But we also saw that there is a boundary or even a bottleneck with users interacting between different chains, simply because they don't want to purchase a token or bridge over to pay for gas. At the same time, you might even just hold, USDT in your wallet on ERC20, but you don't even have ETH, so you can't even bridge that over or do a swap to get ETH in the first place. And this is where like the power of U-Wallets, where we know our future development is utilizing a pay master feature. Now you can see it as similar to an intermediary service, where it's providing, once again, the utility of you being able to transact with multiple chains. And all that is happening on the back end for us is users are technically purchasing Ucoin. Now, if you're a Ucoin holder, this is amazing for you because you know that there's always high transactions happening on chain. You know that there's always a buy spend feature. So even yes, there are people selling, there are burn mechanisms and so forth that we have, but one thing you want to know that there is utility. The utility is not necessarily just people buying and holding the token for TVL, but the ability to buy and sell at ease. And there is a purpose or necessity for people to be able to buy and spend. So one of those necessities, for instance, is that the users for instance, on the paymaster side are settling these orders technically in Ucoin, allowing us to purchase Ucoin, sell Ucoin at the same time, transactions for us. And the nice part, what we've done in terms of like the reward mechanisms, where I was speaking earlier about how people from traditional banking, they don't obviously receive, let's say, the full incentive of revenue that's earned. So if you are a holder technically in tokens, you're almost like a shareholder, right? Because that's how we actually even do IPOs and so forth. Technically, it's like a shareholder. And you want to earn a portion of that revenue. Now, you could say the difference in the fees that we earn from those transactions are actually shared in revenue. So this goes all the way into our staking, where the revenue is going back into the holders because obviously they locked into the contract for a period, 30, 360, whatever they choose. And they want to know how they're earning additional, not even just Ucoin, but how they're earning within the staking platform. And this is purely by our high rev share of how much revenue we're sharing with the users. And just to go back on the utility model, one of the other parts that we noticed, for instance, and I know I've mentioned it before, is that I don't see a purpose of crypto ever needing to necessarily bridge itself to traditional Web2. So for instance, majority of us right now, whichever country we live in, if we want to buy something, most likely we are going to convert our assets into fiat, right? I believe this is obviously a redundant step, especially in saying we have a global commerce. So this is just a global commerce sphere. And all we're doing is going back into traditional Web2. So we're treating this almost like a stock, like it's a commodity, it's a stock, where we are purchasing this for the hopes of going up, and then we're selling to just purchase something elsewhere. The truth is, if we actually are to say that we are a global transactional network, we need to transact within this currency. Now, we obviously know that majority of Web2, this is like a traditional stores, so like your food outlets or your Nike store, your shirts, whatever you want to buy. Most likely, not every single one of them is going to suddenly say, "Hey, we accept USDT payments or we accept BTC," and we created that bridge for it. So instead of having a user, for instance, off ramp into fiat, we instead will allow the user to transact in crypto, and we do the settlement for you in fiat. Meaning that we technically aren't selling off the tokens. We actually hold a treasury reserve asset, similar to, for instance, Coinbase, they hold treasury reserves for stables. So when people off-ramp, on-ramp, they obviously hold different currencies, so fiat currency. And we technically are doing the same. We just only obviously have to hold dollar for this. So you as a user, for instance, want to transact and you want to buy a cup of coffee at Starbucks. But you don't want to off-ramp your tokens because it's going to take maybe even 10 minutes to even an hour, depending, even if you have, I think it's called Pay Fast with Binance or wherever your exchange is, it might take 10 to 20 minutes, everyone would Pay Fast, but all the way up to an hour with super fast payments, 3 days for the others. But that still takes a lot of time. At the same time, you are, moving away from crypto, going back into traditional, and it's just for one transaction. Gas fees are necessary, transaction fees are necessary. And we've been moving that boundary by us being the paymaster. So this is why we've moved away from even saying that we're a MediaFi company, because funny enough, we found this out like last year, and like if we had to call ourselves something, it's PayFi. So PayFi in terms of payments and finance is what we're doing. Just in terms of wallets, our U reports, our RWA, everything technically falls within this PayFi, category, if you'd like to say it. And it simply can be seen as an ease of way of settlements of transactions. And this is what we're trying to do. And once again, even from the perspective of settling transactions in your traditional Web2 space, so for instance, buying your Starbucks coffee once again, and you need to now, settle that order, but you still worry about the fees because gas fees, we always think about that in crypto, and we remove that redundancy. So for instance, yes, you will pay, you'll do your normal transaction, but we are rewarding you back in our native token, which is even, if you're holding the token, you're getting multipliers. So you're technically getting discounts. So the person that's next to you in the store is actually paying more expensive than you, and you didn't have to wait to off-ramp your tokens. And that to me is utility. Someone found a purpose even in purchasing a cup of coffee.
Yeah, and knowing that there is something behind the token that's not just, a number on the screen, it's actually something I can get for it. I think that's super important. You touched on a few very exciting topics that I'm strongly passionate about. First is, like you said, the whole cryptocurrency, I think, suffering from major break. The thing is, I think it's designed to be a currency transaction, but it is it's currently an asset, right? So people don't really transact with it as much, and they're really just trying to hold it or sell it and treat it like a stock, which I think this is where the whole experiment broke. To me, Bitcoin is a huge proof of concept, first of all. I don't think it's a final product. I don't think it's ideal product.
Agreed,
because technology is so much more ahead already. I talked to a lot of crypto experts, and they describe that, but potentially someone out there, still there is a huge opportunity, just like Facebook became the #1 social media in the world. There was MySpace and other social medias before that. They were proof of concept, right? And eventually someone's going to come with a better, stronger, better marketing, better positioning, and better tech to overthrow it. So I feel like in that space, this is when we can really merge the two, the asset and the transactional piece. What is your take on that? What do you think?
It's actually an interesting point. If I had to think about it specifically, I'd say in 2022, I used to remind a lot of my friends about Ethereum. I'll take an example. I said, Ethereum is technically not made for users. It's made for applications.
Mm-hmm.
A lot of people found this confusing. And for me, I would always obviously have to take a lot of profits, put it always into Ethereum. And I saw it as a great way of stored value for me, same the way people see Bitcoin as a store of value. But in a sense, even though it's developed for, you say, projects, and the idea was that this will be a network. So for instance, Ethereum is technically a network that will be allow for scalability to overtake Bitcoin. I think that's flawed in a sense. Like if we only have to think like, okay, Bitcoin is the standard that we need to overtake. And that's basically the North Star. Then the direction of which we're trying to grow becomes, stagnant in the same sense. If you look at, for instance, what you mentioned, Facebook, we had MySpace, My Gamma, that's one of them I remember back in the day, BBM and so forth, right? All of these technically were chat apps or they were messaging boards, right? And Bitcoin, technically, all it is a distributed ledger, right? If we had to take the fundamental piece of what Bitcoin is and start scaling from that point, I think there is a great opportunity, but if we only see it as a North Star based on market cap, then we're most likely going to end up skating to the exact same, wall. You're going to end up hitting that same dead wall.
Mm-hmm. Do you think we're going to see this new player coming up soon in the space of, new coin, new token?
Yeah, obviously I should be shilling you on this, but actually I'd love to mention quite a few interesting, say developments on the token side, just from not just U-Topia, but other tokens within the, the space. And there's a lot of great growth. And the thing that I like the most from every, let's say, ideological bull run. So for instance, the NFT market was an ideological bull run. It was based off one picture and price go up. And we had the same thing with memes. And then what we left with afterwards is the development sphere, because everyone thinks utility is going to win. And we actually started to see that quite often, recently especially. And then the number one category you could say that has shown the greatest stride has been the RWA category. Obviously, next to the AI category and infrastructure, those have been the two forerunners. And if you had to think about the limitations of Bitcoin, for instance, is exactly the same problems that these specific categories are trying to, resolve, but not trying to compete with Bitcoin.
Mhm.
They're actually trying to resolve an independent or, a singular problem. There is going to be something though that is going to merge all of these collectively, where they're not trying to compete and they're rather looking at everyone in crypto as partners than competitors. They're the ones that are going to strive the most. If you look at Stripe or Visa payments, they never looked at every like that traditional banking as like competitors. Instead, they just try to merge with them. So that to me is if somebody finds that gap on how can we work collectively together and be kind of like that string across the crypto sphere that just connects everybody together. Like we are trying to do it, but I honestly believe there's a lot more fundamentally that would be needed on it.
Yeah, I think the biggest confusion for regular person out there on the street about Web3 or cryptocurrency is that when they hear cryptocurrency or token or coin, they put it all in the same row. They put it all into the same, like, oh, they all compete for the same spotlight. But no, like you mentioned, Ethereum was designed to support applications, right? It was designed for that world. So I think if we were to kind of separate and really show people the different levels of tokens, what their utility is, what their purpose is, maybe it would be easier to understand. Like for example, U-Topia is more about rewards. It's all about that kind of world. Ethereum is that's why like the gas fee is so high, right? That makes sense.
Absolutely, yeah.
Once and you need to buy a bunch of it to run support applications or development. Yeah, that makes total sense. But people hear that common idea of like, oh, tokens out there, crypto, and they try to put it in the same level that Bitcoin, which is not supposed to be. And I think that is exactly that we're missing the piece. There is many categories and education to the public to explain what it is. And frankly, it is really freaking complicated, right? Like the whole thing, how many tokens there are and how the ecosystem works. And then you're like, why do I have to pay to swap something? What is the gas fees? I think this is where we're missing a lot of opportunity, is to actually breaking it down and simplifying it, which I think we're still super early days. I think we're still at the stage where we have strong proof of concepts for lots of things. And we have the best minds in the industry coming from finance, coming from development, coming from security and building right now, which is super, super insane. And I'm excited to see where we're going to take this, because the concept has been proven. Now we're just waiting for the perfect, how would I say it? Way of combining all this into something that masses can just easily adapt, understand, right, and utilize every day. You also touched.
I do agree with you. Like, for instance, when you explain that the majority of people see rest of crypto as Bitcoin, and I think that goes back into that, attention-based market that we obviously, as a new emerging market, we obviously want global share. If you go into any company documents, they always, what's global share, what's market dominance, and so forth. And then we look holistically at the crypto space of how we're growing. I think that technically is flawed in a sense, right? At the same time, when people come into crypto, you notice that, for instance, NFTs, no utility technically except for PFP, and then meme coins. So the biggest sign of the highest growth of new users into the space have been purely based on that ideology. And perhaps sometime in the future, people will start seeing something from crypto that show utility in the real world, that they will stop associating, the rest of crypto with money go up, price go up, I get rich.
So true. Something you touched earlier that I really want to expand on, and hopefully you can break it down in a simple term to like masses, is a scary word or exciting word for some: staking. I want to understand staking from a basic user point of view. What is it? Why should I care as a user about staking? And how does this work? Can you like dumb it down to like
Yeah.
this to me?
I'll choose it like I'll do it like traditional finance, and then I'll bring it back into basically Web3. I'm not sure my mic's clear, so I'll just make sure. So if you look at staking just as a general term, it's a store of value. It's a store of value for you and for the ecosystem that you're interacting with, right? So if you go, for instance, on Ethereum, staking is often used for validators. So validators would not need to hold, because it's POS, obviously proof of stake, for validation. Obviously, I think it's a minimum of 32 ETH to become a validator on the network. And those funds are obviously used to reach consensus within the network. You're basically supporting the ecosystem. And if you take it away from all the technical jargon, all that you have done is proven or given yourself, similar to your bank, you've given your funds into a trusted network. Because what you're doing in a staking contract, you're transferring the ownership of your tokens with a proof on ledger that you will get these tokens back. Remember that the tokens are taken up, you're sending the tokens from one wallet to the next. Within that same contract, it's written, on smart contract level, that you have claimable ownership of those funds. Now, unlike in your banking system, traditional banking, where you put it in a savings account, you'd never get that receipt back. You actually have an insurance policy that guarantees you at least 50% if this company goes bankrupt. And that will be resolved in X amount of days, up to 6 months. Now, what is staking compared to your traditional banking? So in traditional banking, you have interest fund accounts. So you have fixed interest accounts, which are basically fixed sums. And then you have your open savings accounts. Basically, the difference between the two is one is locked in a contract for a period of 30 days, and the other one is open. Obviously, this impacts the type of interest you are given back into your accounts at the end of the period. Okay, and then obviously, depending on your bank, you might have some compounding. I won't get too much into that. And then all you're doing is providing capital for your bank, because you trust your bank as a trusted system once again, for your bank to utilize your capital. Your capital will be utilized to lend to basically for lenders, and then for earning interest from borrowers. Okay. Now in crypto, staking almost works the same. You are providing capital to a trusted party, with a ledger that proves that you will get your funds back. Basically, the smart contract, the staking contract, with a vesting period. So, for instance, you can choose whichever. Some of them don't, and you have a fixed, we say APY. Let's just call it interest for the sake of it, right? So you have your fixed interest that you're going to earn on that. So, in a sense, yes, it is an interest saving account, but the difference is that when you're providing capital to a staking contract, they're not necessarily taking your capital and using it for lenders and borrowers. That's yield farming, right? And sometimes it is used for that, but in traditional staking, not so much. Instead, what you are earning from is the utility of the token. So for instance, the transactions from other people transacting, the revenue that's generated from buying and selling LP pools and so forth. There's a lot more that other projects can put into it. But you are actually earning from being a source of liquidity for a trusted system and a proven ledger. So in my personal opinion, it makes a lot more sense than even your traditional banking, right? So on one side is that you have ease of access. So for instance, in crypto, you actually can withdraw before that period and not be penalized on your initial capital, but you will be penalized in some contracts on the interest earned. Now, if you do the same thing in traditional banking, you are penalized on your initial capital because you're penalized. The reason you're penalized is actually because it hurts them on their books when they are taken into account on their creditors, because they have creditors that they have to pay or dues basically from lending your capital out. Because your capital, once you've given it to them, they already lent it, and it has their books. So this is basically, in a sense, why you're being charged. It's because they're angry. Technically, they've been charged for it, and they need to recoup those fees.
So can you say it's a safer form of funding a project or a company or whatever that you support, and you're going to be rewarded at the end as well? So it's like investing into it, but lower risk because you can take all your money back.
Yeah, for instance, especially in Web3, a lot of the times we lock funds in our, our ledgers, our wallets, and then at the end we check on it. What I would say, I'm not giving any financial advice, but a safest or an alternative to ensuring that your money is working for you is to put it in stake, because you already are proving that you trust the network or the project by putting it into a wallet and saying, I'll forget about it, versus putting in a staking contract. The staking contract is just an on-chain proof that you trust in that network, and you are being rewarded for that trust. And that's a huge difference. So, like, for instance, I'll put my ETH into my vault, and I'll put it in my ledger, lock it away. Technically, I'm not earning from it. And I think I've said it in the beginning. What I explain as a financial advisor is that majority of high net individuals that I used to deal with barely had capital in their bank accounts. They had floating capital that technically wasn't really much, and the rest of their capital was flowing, was always working for them. And this is basically what staking allows you to do in the Web3 space, is that you really do trust the network, but you're ensuring that your capital is not within technically your ownership, but it is in an IOU. And that is even better than an IOU in traditional banking, because that ledger that you have is only for 40% or 50% of your capital, versus in smart contract, it's 100% of your capital, guarantee that if you even early withdraw, you're only penalized on the profit from it than the initial capital.
I love it. I love the way how you explain it. Super simple, super easy to understand. It's like alternative to investing. That is the safest, the like return guarantee. You still have control of your money. This is a smart move because you need to get your money to work. And in Guru situation, we do have staking. We announced them last week. I know you guys are having a staking program as well. And in our case, it is that. So when you stake with Guru, you are trusting with your funds and you are investing into the future of the company. Keep building the infrastructure, keep building amazing features and developing modules in order to expand and grow bigger in Web3 and becoming that trusted partner for major developers who want to enter the Web3 space. You are staking the certain amount of tokens, and you are getting some tokens as reward, as a thank you for trusting in us. But it's not the main point. I think the main point with us, that is the hybrid model, which I think is super interesting, is all the applications that run on Guru infrastructure, they will require AI gurus. And AI gurus is this, I would say, utility or gas. I like to call it like, fuel for the apps, because you will need that to support the infrastructure alone. And the way how to get them is by staking gurus. So the ideally is you collect the bag, you put it into Guru staking, you still own it, it doesn't go anywhere, but you are already sort of a shareholder of the company, or part of the core group that owns the Guru network, and that start producing you that gas, right? You can sell that gas on the market, which we're also providing that market to drop it, or you can utilize for your own application. So if you're building a major app that requires lots of gas, well, you probably should buy a major stake of Gurus and stake them, and then kind of support your own projects with no extra charge. Or you can just farm those AI gurus and dump them back on the market, so that those who don't have staking program but need the gurus to operate their apps, they can just easily buy them. And I think that is sort of utility angle that we were talking about to the whole gurus. Perfect. We have that on the screen. I didn't really mean to pull the whole thing.
I just wanted to illustrate what are we talking about. This is what what is Guru staking page, how it looks, and this one. Oh, give me a second. This one is the staking page for Ucoin, and if Tyler wants to comment something about it,
Yeah, I mean, Tyler,
to
why don't you walk through
the
like
wider audience, you're more than welcomed.
yeah, it's not meant to be
Awesome.
it's not meant to be like an ad or integration. We are
Plug time.
yeah, I really want to hear the same like perspective from you. Like how what's the thinking behind your staking program? What is the utility or the benefit, or how do you see it? The same way how we just did in terms of simplifying it, making it accessible to everyone to understand.
Awesome. Yeah, actually, I'd like to touch base also on the Guru stake. And when I met with Evgeny a few weeks ago, we obviously went through the developments of your staking, which I found really interesting. Obviously, the dual token staking and the way you guys approach it, especially if you look at the vendor model. I would say like highly competitive, especially not just for the Guru AI token, but for actually the Guru native token as well, as the initial contributors are early, you can say your early holders. Now, the same thing you could say for Ucoin. There might be, a fundamental difference of the way we are operating our staking pools, but operationally, it's almost at the same, especially for what we see the purpose of our staking, of how it connects to the broader ecosystem. So fun fact is that we actually weren't going to go ahead with staking initially. This was part of our future roadmap development. But once we started working with the Guru team and testing the application from the product team, we noticed there was a shortfall linking between our events. So, for instance, users doing the off-chain and on-chain events. So this is basically the social interactions or buying, trading, and then going on to our U rewards. There was a fundamental layer that wasn't, linking all these together. And then, we looked at our existing tech stack and our roadmap, and this is one of the things I found is that the staking technically links all this together. Just to explain it better, is that our staking has different types of APY and given for different types of users. The initial APYs that we're going with, once again, I think we'll have a social media post on Monday, so I'll hold off on announcing the exact amounts, but it's technically the highest in the industry on BNB as well as Ucoin. The reason we are able to do it is because of how we've chosen to reward, let's say, our early contributors at the same time of the utility purpose of our staking pool. So on one level is that, yes, you are technically working with what U-Topia is, the PayFi ecosystem. So payment solution is what we do. And Ucoin is a utility token made by transactions. And this is what we want to do from the U reward side, which is our catalog of 70,000 items. The idea of even having the catalog there is that Ucoin has a purpose for users to buy and sell. This is how we earn revenue. And if you even go back into our U-Trader, which is a neo-DAX, I won't get into too much technical detail of what a neo-DAX is or U-Wallet. These work off on paymasters, allowing for settlements of orders. Now, at the neo-DAX side, for instance, on U-Trader, it's technically leverage trades on the spot market, so like a DApp, technically using leverage, pure liquidity. And we utilize different paymasters all the way to Ripple Foundation to leverage these positions for the user. And all these settlements that are happening are paid through with Ucoin. Once again, a payment network. And then if you go into U-Wallet, which utilizes our accounts abstraction and chain abstraction, chain abstraction, not really accounts, on chain abstraction layer, the paymaster, once again, for doing bridging or swaps from different types of tokens. Paymaster, once again, is for Ucoin. Now, everything that happens, if you notice with Ucoin, is a transactional model. And you as a user, if you want to benefit from the ecosystem, not necessarily just with Ucoin, but even with BNB by providing liquidity into the ecosystem, you are technically, I would say, almost like a shareholder, right? So you're an investor, you're a shareholder, and you do deserve a portion of our proceeds from our efforts, because without you providing that, that liquidity to, for instance, give us a high TVL, we have distributed our tokens out to the market. We have 1 billion tokens, we've given it to everyone. now it's basically with that the liquidity given out to the market, how much trust do we have from all the holders? And that comes through TVL. And this obviously allows us to build more at the same time and have a higher liquidity depth for transactions within the space. So all the way to U-Trader, when we do need greater depth for different pay rails that we'll be facilitating, we have the ability to do so because of the trusted network. And obviously not with your tokens, without the tokens within the ecosystem's control. But the ecosystem's control tokens are only valid if there's individual parties that trust the token in the first place, right? And this is what we provide for the user, is the ability, yes, to earn, but also to do something. So as I was saying, the staking allows you also to earn more. So that the earn more part is basically bonuses on your APY, or for instance, get discounts on purchases and free items. And this is where we have that Guru actually completely taken from Guru. So Guru has T-Guru and U-Topia has TU. And we're utilizing basically a similar point system where users now are earning these TU points and obviously convertible back into U-Coin. Same thing like T-Guru, convertible back into Guru token. Once again, the great part of this is that you are earning through transacting and doing what you usually would do in Web3, but you are earning from it now. So I really love the fact that you are, earning bonuses. So like, okay, I trust you as a user. I'm contributing into your ecosystem. And it's not just that I'm earning this APY, I'm actually getting something else. So I can actually get that Starbucks coffee I mentioned as like a freebie, and that's just because I staked. Or that I can now actually get a bonus on my transaction fees or additional tokens because we are looking at our partners integration. So like similar to, let's say, launchpad services or gamified like Z-League, Gleam, Magic Square, where users go for airdrops and they complete social tasks to earn tokens. With us, we are looking at not even necessarily you having to go like a post, go tweet, but how can you socially interact as you normally would, but earn points from those which are convertible into real world assets or into our donated token. At the same time, you also are, if you're staking, you're earning much more from those because you're a true contributor.
Yeah, when I was just entering Web3 space, I loved the whole concept of like why rewarding people for doing basic things, right? And the answer was like, well, normal companies spend money on marketing to get to some metric. Why spend money on marketing if you can spend money on your community? And to me, that was like, boom, immediately. Duh.
Yeah.
Like, this is the best way to do things. And I think this is what Web3 is all about. But honestly, I don't want this to sound like it's all butterflies and flowers. It's a fairy land. I want to be, this is raw podcast. It's raw space where we want to be truthful and honest. What are the downsides of staking?
Yeah, I guess especially if you're putting, so for instance, let's go for tokens that do not perform. So for instance, you have tokens that you put into a staking pool, and that specific project did not perform, to your expectation. So the value, the native value of your token to dollar obviously decreased. There's also the chance of exploitation. So, the number of hacks and so forth that happen in crypto, I think it's about 90% of them actually or higher happen in bridging. Now, obviously, bridging and cross-chain, those are where high vulnerabilities are. And some staking contracts also present a similar vulnerability when these contracts aren't done correctly, like for instance, being sandwiched because you don't have enough gas fees and you're trying to do multiple transactions. And basically, it opens you to these vulnerabilities if you are trusting the wrong trusted system. One is, yes, the potential value. For instance, yes, you did get the APY of 10%, but it didn't really mean a difference because the token's down 90%. And that's the thing, is that it is a trusted system with a future projected value. It's technically almost like a futures contract you're signing when you're putting it into a staking contract. So yes, it does present that as as a flaw, especially if it's not a stable coin. So for instance, you stake USDT, you're going to get the USDT back at the end. Circle's not going anywhere, nowhere's Tether, right? Please do not hold this recording if anything happens. But yes, this is one of the issues, that users, might take into account. But I think the way that projects can mitigate this is by the ease of use. So the ability, for instance, for users to off-ramp, get their tokens out and not lock them, where if something happens to the project, the user has the ability to take their funds out of the staking contract and sell those, to mitigate their losses if they need to sell, or even sell portions, or whatever the user wants to do. It's the ability for the user to make those decisions. And then once again, it goes over to the technical side. So even with our smart contract, I think the smart contract was ready technically 4 weeks ago. And between the 4 weeks to date, all that has been happening is testing, right? Back and forth. U-Topia team working with the Guru team, and then obviously our third-party services as well. Testing, ensuring the functionality is there. And once again on the user side, because that is where there's a lot of potential for risk for the user, and it can be something so small as, once again, not having enough gas fees, and you try to do multiple transactions, and someone basically took your position.
Right.
Yeah, and once again, also the not to get too technical, but like there's also vulnerabilities with even the founders themselves, and how they manage those assets. And once again, this is why I always use the term a trusted networking system. So yes, as a user, yep.
The outcome sounds like it's still investing. It's not just a deposit box that guarantees you, hey, you're gonna keep your money and you're gonna make money, because it's too good to be true, right? Like there is always risk factor. You can, if there really was like, hey, this is, you're gonna put $100, guaranteed you're gonna get $110. Maybe not, maybe yes. But I think the point is we should all treat it as investment, just like you would invest into a startup, right? Or you would invest in a company. Things can happen, news come out, whatever it is, but you should do your due diligence research. You should look into the company, you should look who is the team behind it, what's the track record, can you trust it, can you not, do you support their mission, do you support their vision, and then do you support their execution plan, right? And I think this is where staking is really important, because like you said, it's funding that you provide and you gain a lot of good benefits, and you still have the flexibility of moving money around if needed. But also it has some risks to it. But if you believe in something, just like with any startup, if you believe in the vision, if you believe where it's going to be, it's you're in or you're out, right? And at least there are tools how you can be in, or at least you have a decision to make.
Absolutely. And I like the way you said that, because at the end of the day, for a user, all they want to know is, for instance, when you're staking, the commitment you're making, and I like the term I use, like it's almost like a futures contract. I hope it's not too technical by saying it, but it's your belief in the trust that, for instance, this project has a good runway, there is development that's happening, and this is a good store of value, the value being in your net. For instance, I always say they're trusted, where your money's working for you, and this is a good store of value for you. And once again, you have to do your due diligence, and this is why, for instance, staking can't work for a meme coin. There's no meme coin doing staking, right? And this is why staking's technically only meant for tokens that have true utility purpose.
Right, and good track record, I would say.
And good track record, absolutely good, sound track record.
I have one more topic that I want to talk to you about. Is pretty simple. It's straightforward. What excites you in Web3 right now?
Yeah, I think there's been a lot. So I must be honest, I do spend too much time online in Web3. I mean, honestly, majority of my friends, actually every single one of my friends are in Web3. My wife is in Web3. So a lot of the stuff that happens in my life revolves around this. And I'm, I don't even have like your traditional, let's say, social media apps, like 100%, in Web3. So I see a lot of developments happening, see a lot of the meme coin cycles and so forth. But I think what I'm most excited about is the interconnected of projects. So I've seen a lot of projects actually stepping away from the traditional sense that we used to see in 2021, where they would develop on their own and try to compete against their nearest competitor. If you notice, for instance, even Justin Sun working directly now with Coinbase. I think that was one of the announcements yesterday. And this is a great thing to see, like where projects are going towards common goals. And this is, like as a fundamental ideological perspective, if we all are believing in a common goal, then trying to compete with the market share that's already in crypto, that gives us more room and opportunity collectively than trying to vampire attack each other's ecosystems. Like this is why you would notice like even your favorite crypto influencers like Bitcoin dominance of altcoins. I don't like that narrative. What is the global share of people joining crypto? How many new users, not just wallets holders, that are in the space? And this is what I love seeing recently is that there's a lot more opportunity for not just individuals in crypto, like to buy tokens or utilize a utility, but for projects at the same time. Of how open projects have been recently, to working together, not just like exchanges, token, launch token, and then no other partnerships. And recently, we've seen quite a move away from that previous direction, where it was predatory, where people would attack each other's ecosystems and try to like chain. What's it? Cardano used to market themselves as the Ethereum killer, right? Very predatory, where they're trying to attack or grab those users. And I've noticed that like within the greater cryptosphere, and I think that you could actually give it to meme coins for doing this. Meme coins allow people to actually work with different communities. Like I can be a Milady NFT guy, but I'm still holding Fartcoin, and it allow people to actually grow. So, like for instance, one of our favorite meme coins, Bonk. If you go onto their website, you'll see they have like over 200 different types of applications and partnerships they've worked with. And you have to give credit to the meme coin communities and teams, is that they actually open this avenue where more projects are open to working together.
Yeah, and I truly agree with you. The Web3 community is one of the strongest communities, period. Like, if you really think about communities of tennis players, soccer players, I don't know, like people in tech overall, I think crypto is the tightest I've seen, and I love going to events. Probably lots of people who are listening right now, they've seen me at some events. I love meeting people, and crypto or Web3 space has been the tightest. Like the support is unreal. And currently, the way how I see it, it's small town or village that is single. It's like no skyscrapers yet, and those companies who are like, oh, we're Ethereum killers, they're trying to build up. They're trying to take those users and put them on top of their infrastructure and build up. But before you build a city up, you have to build city out, right? You have to really wide first. You have to have that layer of everything is happening.
The foundational set. Yeah, absolutely.
Because before you can build a city, like skyscraper like that, you need people who make glass, people who make stone, people who make doorknobs, people who make all kind of things, right? Before you can actually make something big happen. And I think this is the biggest sort of the issue with humanity, that we always try to go ahead of ourselves. Like we see the trend and we're like, oh, I want to be 20 steps ahead in the trend. But if infrastructure is not in place, you can't do that. You can't make electric cars if there is no factories and no supply and nothing. You can't send rockets into space if there is no platform for it. And you can't launch amazing crypto projects or Web3 projects if there is no infrastructure in place. So this is why I truly agree. I see where you're heading with this. The combining resources, combining expertise, and working together on building more infrastructure. This is era of awakening. We're realizing, oh my God, we need to build more. We need better infrastructure. We need quicker. We need zero or close to zero gas fees, close to zero transaction speeds. We need trust. We need transparency. We need encryption of those blocks, which also came later, right? To me, it's like I told my brother recently, I was like, man, do you know that people can, like, if you share your wallet, they can go and see what you have on your wallet? He was like,
that's crazy.
I was like, but don't worry. Like the modern technology allows to encrypt specific blocks so people can only see information that you allow them to see. And he's like, oh, okay, cool. But that's what I'm saying. Like we're still building those things, right? And I'm excited to see where the Web3 is heading overall. Like, I'm saying it's early days. You kind of agreed with me, but I want to iterate on that. How early are we?
I would say right now, if you had to look at it, I like Fibonacci cycles. At the pinnacle of 0.618, it's basically that golden ratio. If you even had to take it even as a ratio, I would say we at like that 20%. We just at the the forefront. We're no longer at zero. Even if we had to take as civilization theory, type one, type two, type three civilization, we no longer type zero civilization or type zero ecosystem that in crypto. We technically on that type one, where we have the infrastructure, as you were mentioning, but now it's about putting it together. How can we work together to put all these different pieces together?
Yeah, and like the example is our partnership, right? Like, how
Yeah.
long would it take you guys to build what we have going if you were to do it internally? A
That would
year?
have been ridiculous. Like we had a meeting about that. I always stress it to the team. I say the turnaround time, if everyone wants to know, it's about 5 months. Technically, development side we could say is 3 to 4 months working together with Guru team. But yeah, internally that would be not just impossible, um, absolutely ridiculous. Just in terms of the infrastructure from Guru side. From the swapping features and so forth that they have, all the way to the technical support from their partnerships that they developed in the past. That takes years of time to develop.
Absolutely. And this is why it was taking such a long time for Web3 to kind of pick up and move. Because in order to launch something, you really had to be the wizard, knowing all these things, know the ins and outs, right? And it's not like you're working with us and we are the masters of our tech and we just utilizing keeping it secret. No, anyone can do using our infrastructure. They can do amazing things quickly, fast, right? And scalable as well. And I think this is the new era of things opening up. I look forward to seeing thousands of apps being launched, amazing ideas, amazing approaches. People, I love that in this tight community there are a lot of bright minds who see things that
Yeah.
people don't, and when they bring it to market quickly, which that is also another like human factor, right? We're all people, and we need to have that validation, support, not just funding. Funding runs out, but getting to results, getting to those milestones of like idea, prototype, first launch, first user, first confirmation, right? And you keep building those blocks, that keeps you exciting and going. And if from one step to another is 5 to 7 years or 1 to 2 years, it's too far out. But if it's days,
Yeah.
I think that's where you're like,
Absolutely.
wow, I can accelerate, I can try something out. And also reality is most people are really busy. Like the world requires you to have full-time income and dedicate your time somewhere else. So we're not no longer in the era where you can just work 2 days a week and then have all the time off to experiment, right? And work with your canoe. You want something that's fast, something that's out of the box, and you want to validate things. So I think this is where the beauty comes in. So I look forward to that. I think the same thing like websites before. Remember back in the day,
Yeah.
how do you get a website? How do you get hosting? How do you connect that? Right now, you can just click few buttons and launch your website. And
Quite literally, yeah. You can use Canva AI right now. A prompt literally creates user prompts creates a website.
right, and Figma is in the space now too. Like,
Oh yes, yes, yeah. No coding, exactly. No
yeah,
code
but also
website.
those are like more complex things, right? I'm talking more about like GoDaddy has their system, Wix,
Yeah.
WordPress, all of those systems like immediately gives access to millions of people to launch their websites fast, great quality, working, loading fast, because that's also another issue. Okay, let's say you can launch a website. Let's say you got it to host, but then it loads for 15 seconds and people leave, right? They never get to see your content. So all of that is
Yeah.
required.
Yeah, it's actually quite crazy, coming from the days of WordPress, where that seemed like automation, that seemed like easy, and now we're at literally a few prompts, as I say, like Canva AI. I just wonder, like, with crypto, where we will be moving to in the future, because we've kind of seen it, like with Pump Fund, right? If you say 2021, if you wanted to launch your coin, you had to have a buddy that was a dev, so you could write the smart contract because you couldn't just copy paste the smart contract. Now you can go on Pump Fun and like just type a few things in the box, and then you got your own smart contract. So
Yeah.
it's good to see that like we actually are moving in that direction of ease of use and scalability. But at the same time, the technical, as you say, like the load time on a website, and if you want more unique functions, how do we, as an ecosystem, how do we have a dedicated system where we can work together that might be that that next forefront in crypto.
How do you feel about Pump Fun?
Pump Fun, you know what? It's all right. I do like the idea of people launching tokens, and
Concept, right?
once again,
Proof
the
of
concept, yeah,
Yeah,
the proof of concept, absolutely. I do love it. Other than that, it serves its purpose, but I don't think that it's kind of for Pump Fun as a project. It's really good for them on the transaction model once again. But I don't see how their transaction model fits great in crypto. Like, what is that? Like their model. So it's like we earn this, and then it's ours. But I don't see how it benefits the users in the space. To me,
exactly.
if there was something in that sense, I would appreciate it more.
I think it's the same thing. It's proof of concept first. We like validate it, because any anomaly that happens is like, wow, people want it, but then it's broken. Just like with NFTs,
Yeah.
broken. The blockchain originally was broken, and right now the launching meme coins is kind of broken. And I feel like there will be new projects that come out that will tackle the major issues using that proof of concept as fuel, and they will dominate the space, just like MySpace dominated at some point, and then Facebook came and just slashed it, right? I truly admire the burning meme concept. They're launching their meme coin launchpad,
Yeah.
which is designed to kind of tackle all the issues that Pump Up Fun has and provide the same fun, exciting experience, that because it has to be fun, it has to be cool, it has to be engaging, it has to be gamified, which that's where they specialize in. But also, it cannot be just a financial scam. It cannot be something that you can
Yeah.
create, kind of get a little hype going, and then kill the token in 5 seconds. And the main
Live on
concept,
stream.
I just want to share like what I think is the genius piece is that there is only one token per day that wins. It's not like thousands of them you can launch. It's
Okay,
one token per day
interesting.
that wins. You have to vote for it, and then that token, when it wins for the day it being launched, and all the participants who voted for it are shareholders in that. So the only way how it can go
Interesting.
to zero, if all those people, random people in the world, were to get into put some hoods on, and then at one moment just sell it, right? That's the only. I think that's a smart, genius decision solution to solve the the rug pull problem, because it is a huge problem, and I
Absolutely.
I believe that actually should be illegal. I think that should be on government level, kind of gated, because
Yeah.
it is not fair. It is not. But guess what? Government's way too slow. Developers and entrepreneurs are way smarter and
Way
quicker.
too fast.
So
Yeah.
instead of just trying to hope that government's going to do something for us, let's fix it ourselves. And I think burning meme is a great alternative to it, because it really gets to down to the problems of what it is. It still allows you to launch things. It still has that social aspect, gamification, and it has all the protection from being rug pulled, so you can actually launch successful tokens. And I think that's
Interesting.
what it was all about at the beginning, right?
Absolutely. And the funny thing you brought up, for instance, I think it was 2023 during like the bear market time, right? So 2022, 2023. During that time, majority of like the projects that came out follow the same ethos, and you won't find them today. So like Rollbit, these are all the casino gambling sites where everything the house technically will always win. They earn huge revenue from it, and we saw FriendTech, for instance. That was a really novel and amazing idea. It's just that the projects earned a lot from it, and then they disappeared. I think the same thing we are going to see with Pump Fun, and you probably would notice, like the team behind it has no longer the interest in scaling. Is because they've earned so much that, and they haven't given back, right? So it's not like the users or community have an input or say on how the ecosystem grows. They don't have like voting rights, they don't have holding rights. It's just we earn the other platform, traditional Web 2. I just sold you my website. And I think a project that would overtake that is if they, I like what you're saying about Burn Fun, Burn Me or Burning Meme. Burning Meme. I do like, for instance, the one, one token wins it all, kind of Lord of the Rings in a sense. But, if they also, if there is a project that will have the ability to incorporate the users more into their business model, because that's what crypto is. It's meant to be shared. This is why there isn't a primary face of Bitcoin, or Vitamin might be the face of Ethereum, but he doesn't hold that much. So I think if more projects would see it in that perspective, it's all about not just yourself as a project, but the people around you. There will be longer lifespans. It's very, very frustrating to see great novel ideas started just for a moment, earn money, and then disappear from it.
Exactly. Yeah. And I think it's the same thing. Maybe a lot of our listeners who are not in the US will not understand, but I'll break it down. There is a platform called Craigslist. It's for putting your ads, sort of any announcements, like you're selling a car, selling something, or you want to meet people, or you hiring somebody. It's just public announcements. And they did make it to the news because they're the team with highest returns. What they used to. Now we have bigger companies, but it was like $1.5 million per employee of return of how much they made. So they were like 12 people team, and they're fine. Like they're doing so good, but it still feels like it's 1990s website. They did not evolve. They did not change anything.
Exactly.
They're
Yeah.
running their model. They dominate their little space, and it makes sense. Yeah, like for them. And I feel like you're right. The pump fund, it kind of stays in the same stage. Maybe we'll still use that popularity because it is a platform that earned its name, but it doesn't have much room to grow, to evolve in that space unless they choose to, because Craigslist also could. They just chose not to, right? So that's quite fascinating. Anything you want to share else with our audience or discuss on this call or on this show?
No, honestly, I just had a really great call. Honestly, it's an open dialogue, a really unique show. So I really appreciated the time. Absolutely amazing. And don't forget, Ucoin is live, and our staking is going live probably in the next 7 days. So check it out. I think our website's here, U-Topia. Check out our Twitter. Join the community, see our general updates. And if you really like the show, drop a comment on Twitter. Drop a comment on Telegram. We're open to feedback, and yeah, once again, really love the show. I can't wait to come back again.
Awesome. Yeah, would love to have you again. The rest of your team too. I think this is the whole format. This is the first episode we're kicking off, and I hope we kind of share the idea, the concept of it. It's not about promotion. It's really about just honest conversations, interesting topics, amazing guests with specific expertise in some areas. And I wanted to kind of direct into people who just love the space and people who want to enter the space, right? Just like me, I went through the journey of getting into the Web3 starting, I don't know, last summer. So I'm pretty new, and I had to go through such a learning curve to understand everything from the inside. And thankfully, I had a great support system from my team and from all the partners we've been working with. They've been helping me get up to speed. But I understand what a huge barrier of entrance there is just from education. And I really hope that we will learn how to simplify things, that people won't need to understand that there is millions of different networks and they don't somehow talk to each other. And you have to bridge them through some third party if you want to swap tokens. And then you have to pay gas fees on top of it. And then you need to have multiple wallets involved. It's too much for a basic user. I hope we find out a way how to streamline all of this. And thankfully, I already know some projects that do that. And we work with them and partner with them to bring that experience into Guru experience, because that would be fantastic. For anyone who's listening and would love to support U-Topia project, Guru project, by all means, go stake. You understand now the risks, you understand the rewards, you understand what this is all about. And if it sounds appealing to you, and if it sounds like a great, interesting idea, something you want to try, which is a low entrance fee, by all means, I would give it a shot. But it's not financial advice. Tyler, great having you. Thanks for coming here to the show, and we look forward to having you again sometime soon.
Awesome. Thanks so much, guys.
Thank you, Tyler. It's an honor to work with your team and to have you on this stream. And thanks to all our listeners. We will see you next time.
Take care.
Thank you, guys. Bye-bye.